We have to wait for those global macro numbers now.
All right on cue, I guess. The China data is looking quite weak on your screen, as you can see. But both imports and exports are down. So August imports down almost 15% and exports are down almost about 6% And the Chinese market is doing what it does best, moving downwards. But here's what you'll get to see on the show.
Just to give the comparison, the imports were expected to fall by 6%. And they have fallen by 14%.
Yeah.
So, that's a measure of the disappointment that the market will now discount.
All right, we'll talk about all this and more in the next 2.5 hours, but here's what you'll get to see on the show this morning. Bears were all over the Lal Street on Monday as the Sensex slumped to its lowest level in 15 months and the Nifty dropped below 7,600. Nandita Parker of Karma Capital tells us how much more pain there is in store and, of course, what you should be doing at this juncture. China remains in focus as data shows that the country's foreign exchange reserves have fallen by $93.9 billion in August. Mark Matthews of Bank Julius Baer will track all the global market action for us. Shilpa Kumar of ICICI Bank will join in to discuss the base rate picture and what the expectation is for the banking system. And the Met Department sticks to its monsoon forecast amidst conflicting report, says that rainfall has been 14% below normal so far. Ashok Gulati of ICRIER joins in to assess the impact on rural consumption and food inflation.
All right, that's what we've lined up and we don't have US markets to take stock of today. So let's take a look at what people are telling us before we start trading this morning. Our expert today is Bharat Iyer of JP Morgan. Bharat says the downward momentum accelerated in Indian equities as the FI selling continued across emerging markets, which has been the main driver of the correction. He adds current volatility in the financial market has coincided with a series of policy announcements in the emerging markets with limited success so far. Bharat says FOMC's September 17 decision would be key.
Okay, there was a crunching fall in the rupee yesterday, so 66.82 now on the rupee. Ashutosh Raina of HDFC Bank says the dollar INR currency pair has been under pressure, close to the psychological level of 67 to the dollar, tracking weakness in other emerging market currencies. He expects the pair to trade weak in the near future in a range of 66.5 to 67. And on the bond market, he says bonds have seen some selling interest tracking the depreciating currency and mixed US jobs data. He expects the 10-year bond yield to continue trading in the 7.7 to 7.8% range.
Okay, just a word on the August trade data. Actually, the exports were expected to fall by 6%. They have fallen by 6%. It's the import picture that's much worse. China was expected, the imports were expected to drop by 8.2%. They've dropped by 14%. Now, that's a measure of the problem that countries exporting to China are facing. China is simply importing less, and that's a big problem for countries that trade with China. China is India's third largest partner, not a very big partner, but still, to the extent that it consumes less, there is going to be trouble. But let's put all these data to an expert who is joining us now. Hartmut Issel of UBS joins us on the phone line from Singapore. Morning, Hartmut. Thank you very much for joining us. Will this fresh Chinese trade data mean a fresh onslaught of selling in EM markets?
It has the potential to, but I would also argue that it is not really new. We knew that the Chinese economy is going through a softer period, and especially what we observe, and we'll also see in the later part of this week whether this data gets confirmed, that especially on the property side, or property investment, I should say, things have been fairly weak. So we need to see if the government is able to counter this effect, basically stabilize growth via infrastructure. So that will be interesting. Maybe one word of caution as well on the import side. To some degree, that is also potentially influenced by the factory closures that we had in the larger Beijing area because of the parades. Okay. So I wouldn't read too much into it, but it could have also had a somewhat negative effect this time around.
Okay. Do you see more downside for many of these Asian markets, Hartmut? Because, some of the markets like Hang Seng are now down about 12% this year already. Given the situation in China, do you foresee more selling pressure in many Asian markets?
Well, what is interesting, we just did an exercise here at the bank at UBS, and we looked at how especially price to book value, so more stable valuation measures, how do they stack up with recent crises or recessions, etc. And we're awfully close now to not maybe necessarily the Asian crisis, but certainly very close to the great financial crisis, basically within reach on that level. So you could argue people are quite negative, really compared it to one of the crises of the century, as many people have termed it. Now, so therefore, the valuations, or the expectations, I should say, that investors have also on the Asian market, very, very low already. At the same time, I think we also need to concede that earnings, by and large, are still on the weak side. What I would see as a glimmer of hope, though, is especially for China, which is obviously the biggest weight in this market. If I look there at the earnings season, and especially if I eliminate the weakness in oil, so take the energy component out, the energy companies, it starts to look a little bit better already on the earnings growth side. So I'm not talking GDP growth, I'm really talking earnings growth, where the bar has been extremely low already in the last year. So we're seeing some bottoming out. So therefore, I would say, within emerging markets, we would stick to our overweight within emerging markets of Asia. However, overall emerging markets in our global strategy, we still have a slight underweight. I do believe, though, that investors have been sufficiently negative on Asian market towards the end of the year. I wouldn't be surprised if we can pull up a bit again.
Okay. At the moment, at what point in time do you think your underweight in emerging markets will go away? Is it anywhere close to it? And within the pack, are you recommending buy on any market? Are you recommending a buy on India after this 20% fall in the last, 5 months?
Yeah, we have been buying India before, and I look at two sides. If you look at it from a strategy perspective, more comparing it to other markets, especially in EM, actually has held up quite well. But of course, it hasn't been. Also, India hasn't been entirely able, or it hasn't been spared in the global sell-off. Basically, no market has been spared, but India did better than other emerging markets within it. And if I look at the current Nifty levels, I do find it very, very interesting. Probably you need more of a 6-month view, I suppose. But we should come back over 8,000. I'm a bit surprised that it went that low in the first place.
Okay, well, but you did also make a point that we are within reach of the great financial crisis. I mean, if that is the situation, then don't you think one should be away from equities for a while?
Well, at first glance, one might think so, but historically, if you follow up, at which kind of valuation levels 12 months later you had actually the best returns, it typically wasn't when we had newspapers or other commentators, being very positive and talking about the long-term prospects. Typically, when the opposite happened, so basically, macro data that came in sounded weak. Very few people had, really encouraging opinions about China in particular. That seems to be the situation now. But normally, if you go back in history, this is exactly when actually you should be engaged, and you should also have some positioning there. So, I wouldn't recommend to sell out at this point at these low levels.
Back to the contrary, yesterday Nick Parsons was saying that the biggest regret for him about the selling is it doesn't still feel like capitulation. You can buy when you feel that there is a sense of capitulation. But Hartmut, finally, what is the next data that you are looking for to really believe that you can start buying? Which is that crucial data? Is it a Chinese data? Is it a global data? What's the data that you will look forward to?
It is to some degree the Chinese data, or data dump, as we say, this week. So there's a lot more data coming, and that gives us a better sense where the economy really stands. And also, the government has already, since a while, including, by the way, the PBOC, so the central bank, has already started to loosen both on the fiscal side as well on the monetary side a while ago. We're interested to see whether we can already detect some of the first effects. But then, of course, the big event comes out of the Fed. from where I'm sitting, would actually welcome if they really do start the first rate hike in September. That's, by the way, also our base case, so we expect them to do it in September. And if that happened, I do think it would also give a sense of clarity and also certainty in the market. Yes, we have made the first step. And then, if something happens on the U.S. side, they could always take a step back because they already made the first one afterwards, so they have a bit more leeway. I think for the market, probably the better scenario would indeed be if in September, so basically on the 17th, we do see that move.
All right. Thank you very much, Hartmut Issel. That's important to note that here's someone who thinks that if that hike happened, it would actually be good for global markets. I was just looking at all the Asian indices. There are only 3 indices that are in the green as far as Asia Pacific is concerned, year-on-year basis. One is New Zealand, the other is Nikkei, and the third is Karachi. Let's take a break. On that note, our research team will be back with us to detail the top 10 list of stocks they're watching.